Crypto Parabellum podcast. We're back. Episode 6. After 1 week off, we had some vacation, some things going on, but we're back and better than ever, I hope. Alan, how are you, buddy?
I'm doing well. We missed a week, which is a shameful activity, but we're going to make up for it this week.
We'll make up for it. I also started jotting down the like shorts that we can do. We can start doing those just like periodically and release them as their own. But I think the crypto history shorts, a lot of people were like, that'd be sweet. Like people that messaged me
cool, good.
About stuff that went down. So that'd be cool. But yeah, been a couple weeks and we were literally just talking off camera. It's like, man, 2 weeks ago when we were recording, if you go back 2 weeks, you know, Ethereum was like $2,000.
Pretty close. Yeah, maybe it was. It was very close.
It was very close to $2,000. Yeah, I think we wicked a little bit, wicked to 2025, and now we're 25% lower. I mean, we're under $1,500 overnight. So there's a lot going on, and this week's going to be a little bit of a different episode for us because we are going to do a couple story updates. Maybe we can talk about the macro markets for a bit. But I think something that a lot of people have asked me about or asked my opinion on. I had somebody ping me yesterday and say, do you think the bottom's in for the merge? Should I buy and like play this rip into the merge? And I thought, you know what? Let's talk about the merge because I don't think everyone has a full handle on what it is. I'm not 100% certain anybody has a full handle on what it is and what it's going to do, except for the guys merging to Beacon Chain. But I think we should talk about that, and then we'll see what kind of feedback we get.
Yeah, sounds good. Happy to do that.
Cool. So here we sit, and I got to ask you, because you're plugged into investing and you're plugged into a lot of macro forces just every day, like indirectly with what you do. It's been a pretty weird time. If you think about it, we hit the bottom. The absolute bottom on Ethereum was June 18th. So from June 18th to August 14th, we had like a pretty nice 2-month run. So we go from, God, what was the bottom? $885 to $2,025 in 8 weeks.
That's a big jump.
It's a huge jump. Did anything change in those from June to August that justified that move? I mean, what?
Yeah. Okay. So my opinion on that is a couple of things. Some of it could be attributed to the narrative of the merge coming and people sort of like perking up to that. But I would argue that most of it is probably we found what felt like a bottom in traditional markets. So like there was some relief, but there's a ton of forced selling in crypto on Bitcoin, on Ethereum, especially on Ethereum because of all of the wrap ups of lending platforms that had outstanding loans, et cetera, on DeFi. So I think there was a ton, especially for Ethereum, forced selling. And so everything kind of got resolved around the same time. And that's why we see it. But partly narrative based. I mean, typically in crypto, when we have these big narratives, it's a sell the news. And what we mean when we say sell the news is the event happens and everyone's like, wait, the price didn't double. I'm done. And so I think we'd be foolish to think that doesn't happen again. But that, personally, I'm not changing anything. I'm not selling Ethereum because I think it'll be a sell the news event.
Yeah, I do not believe, I really don't, that Ethereum, I think Ethereum comes out of whatever the capitulation down move for all of equities or risk assets is. I think Ethereum comes out better than probably anything else in crypto. Did my camera just freeze? It's unbelievable. No, there we're back. So I think Ethereum comes out of this better than almost anything else in crypto because there's something to be said about what happens post merge. And so it's nice to see that happening. And if you look, we didn't even talk about this before we hopped on here, but if you look at ETH BTC, I mean, we got within a few percentage points of the recent highs, the highs that happened in December of 21. So Ethereum is outperforming tremendously versus Bitcoin.
I think it will continue. I mean, I've talked to you maybe a month ago that I shifted a big portion of my cash into Ethereum rather than into Bitcoin. First I deployed into Bitcoin and I thought now that was a mistake. At that time, which was, I think, a month ago or so, I was telling you like, man, I made a big mistake. I need to get into Ethereum. I really think it will outperform. It's where the exciting like crypto narratives will be spun. DeFi is interesting. Protocols that have revenue are interesting. They can be
That's right.
valued like companies. If you think institutions are coming, and I would argue that they either are or they're building up the capabilities to,
Correct.
they're the things that will interest them. It's like, oh, this DeFi protocol that's built on Ethereum, we can value that like a company. There are revenues, there are emissions. We can
Tremendous
yeah.
revenues, tremendous revenues. Like that's what's interesting is, and maybe this is just like my like macro like touch point on this, is everyone in crypto. And by the way, I say this excluding Bitcoin because Bitcoin's its own thing. I don't even think it's relevant. I don't even think they're related, honestly, anymore. Like other than they just are compared against one another. Um, but if you exclude Bitcoin, which has its own like we've joked about before, just pay people. It's a state store value. You can transfer, the value. Like that's their thing. Every other crypto asset is trying to get to the point where Ethereum is. Okay, every single one. And the thing is, they're all trying to become profitable, right? That's why so much of this shit is brutal to look at. You're like, yes, we have good user acquisition. We have these new games that are being built on chain. This one's faster. This one can handle more transactions per second. This one has the most stability. That's fine. You can't make money. You're not making money, and the activity you're bringing in isn't big enough to justify what you're trying to do. And Ethereum is. I don't have the chart, but I'll link it into the chat afterward. But you know that chart that shows like revenue by protocol?
Yes. Token terminal, right?
Token terminal. Yeah. It's unbelievable. It's not even compared. You can't even compare. So if you're thinking about, hey, I think crypto is going to be here long term, which I think a lot of people do, even like haters of crypto are like, all right,
Yeah.
if you want to get your hat into that ring, you can essentially, all right, so we're going to talk about this in the merge. There's a guaranteed 4.5% return year over year by staking Ethereum.
Yeah.
Now, that's in gross Ethereum tokens, and we'll talk about that. So the price could go down, but gross tokens 4.5%. That's before any minor extracted value or anything else, protocol fees. So 4.5%. If you think crypto's here long term and you think that Ethereum's going to make money, that's a pretty safe bet if they get the merge right, which is how this all comes together. So back to the reason why I'm even bringing this up. Do we think Ethereum's going to continue its move against Bitcoin? I think absolutely. And I think you're going to see, I forget where my level is. I have to go look at my chart. Yeah, I think 10% will happen like not long from now.
It definitely has the possibility to. I mean, that to me, that's where the interest will be. That's where the narratives will be spun up. But I think when you talk about the rewards, the staking rewards for Ethereum, I think we need to be careful about the word guaranteed, because I think that's projected, right? So like the Beacon chain has been running since I believe December of 2020. Correct me if I'm wrong. It's been a while,
Yeah.
right? So like
Yeah.
the merge is not without risk. There is the possibility that something goes wrong, but this Beacon chain has been running for quite some time, and we've been able to kind of look at that for expected outcomes. I think based on what they've seen for the last 2 years and sort of like the test net, if that's the right word for it,
Yeah. Yep.
4.5% is looking likely, but I don't know that that is guaranteed.
Yeah, and it depends how you do it. I think if you run your own validator, you make more, but there's greater risks with that. If you just
Yeah.
stake through Lido, it's slightly less, but then you don't have to worry about the bullshit. Then you also have what happened with 3AC, which made a major run on staked ETH or STETH, which was tradable at whatever 90, 85% of 1-to-1 because it's locked. So there's risks both ways. Yeah, I think it goes the other way. So yes, not guaranteed. I think by the time it's all said and done, and obviously this is me speculating, not financial advice, do your own research, whatever. I think it's going to be closer to 10% annually in gross tokens. Okay. Now, that doesn't matter if the price grows from 2,000 to 200, but you gain 10% more tokens, right? Like, so let's not be silly here. But I think that there's going to be a lot of people who look and say, let's value this like a company. Let's look at how much revenue they're generating. Let's look at where it would make sense for us to get in. And you're going to see a stronger bid on the downfall of all risk assets than you would see anywhere else, which is why, quite frankly, it's intriguing to me.
Yeah. I agree. I think we should cover the merge a little bit because you touched on a few points there that would be interesting to go into more detail, but maybe we need to frame the whole thing.
Yeah.
Maybe I'll just take a shot at a
Sure.
few highlights. Um,
Yeah.
so, and I'm going to be looking at my notes, so bear with me on that.
No worries.
But
Yeah.
so the merge, what that means? What is the merge? We're moving from proof of work to proof of stake. There was a time when crypto as an industry, but largely like the Bitcoin maximalists said, ETH will never do that. ETH will never be able to move to proof of stake. That's a pipe dream. It's not going to happen. And here we are. So I think that's a win in itself. Having the beacon chain running since 2020, now moving over to live, there's a lot at stake, but just being successful, just getting it live is a massive win because it's
Yeah.
a giant accomplishment for everybody that's worked at the Ethereum Foundation. And frankly, like they need that. They're employees too at the end of the day. It's easy to forget that these are people with like real lives and they have like motivations. And uh one thing that I think we've seen with Bitcoin and the turnover of developers is there's no accomplishment. They're so slow to move, and that's Bitcoin by design, right? The
Yeah.
protocol is intended to be slow and not change. Um, that they get demoralized and they're like, I just want to go work on something else. I've been working on the same thing and it's never actually seen the light of day. For Ethereum, this
Right.
is a massive morale win, and I think that is important. It's important to remember these are real people working on a real project that want to see their work out in the wild, and if they don't, they'll leave. So
Yeah.
that's a win. Now, the big question that gets asked is we've had all of this like GPU usage in mining for the last however many years. What happens to all that, right? So you got these massive mining rigs that won't be mining Ethereum anymore. Where do they go? Do you think they go to
Right.
Ethereum Classic? Do you think they go to other sort of productive for now chains, or are they just mass liquidated?
Yeah, I think that you'll see probably once it's all shaken out, once we see what the impact of this merge is. I don't think they're going to be like, all right, well, it happened, let's move on. It's like what exactly are the ramifications of this change? Because proof of work, as you mentioned, you have GPUs. You essentially are trying to solve complex occasion to mine a block. You get a massive reward for that. It's just like Bitcoin in many respects, right? And then you're moving to proof of stake where all you're doing is staking Ethereum to a validator and you get paid for doing that. And that has its own downfalls. We'll talk about that in a second. That said, proof of stake has its issues. There are other proof of work chains out there, obviously most notably Bitcoin. And I think that eventually when this narrative is finally, come to close, maybe you see a bigger run on Bitcoin. The Bitcoin halving is what, year and a half away?
Yeah, I guess so. It's
Yeah.
summer of 24
Yeah. Yep. I think it's actually closer to spring,
spring.
but
Okay,
regardless,
yeah,
so yeah, like so maybe 20 months away, or so. But that usually is what kicks off another cycle, right?
correct.
So far, the way that this thing is run, and quite frankly, it's been impressive that we've held on as long as we have because this has been going on now for really I got into it in October of 19. Everything kicked off in the start of 20. Here we are in the middle of 2022. We got the merge just kind of carrying us through, and then we're not that far away from another Bitcoin halving. And that I think we'll see a greater demand on that because it's going to become less and less economical at present prices to mine if prices don't appreciate, right? You're going to get half the amount of the block reward. So I think you'll see that. But there's still a lot that needs done on proof of stake. It's not like, oh, well, we would just stake now and that's it. So there's a lot that can be done. I think I'm as concerned, quite frankly, with the miners have been used to getting this income for Ethereum, and now it's being decreased. In fact, I know you already mentioned it, but it's literally 90%.
Yeah, a 90% reduction in net new emissions.
Yeah, so it's like the numbers are here. Yearly issuance is set to drop from 5 million ETH under proof of work. So 5 million Ethereum are given out annually to proof of work validators, right?
Yep.
For miners. And that's going to go to 600,000 annually.
It's a massive reduction.
It's a massive reduction. Okay. And so you have to think about what happens from that. I think the ETH Classic move is interesting. In fact, Vitalik's surprisingly supportive of ETH Classic.
I didn't notice.
Yeah, like you'd think he'd shit on it, but he really doesn't. Like he's kind of like, yeah, ETH Classic has its place. I'm glad they're still, trying to do things with it.
Hmm.
And I think he still advises, like not really, but kind of, on ETH Classic, which is pretty wild. So there's a play in there. Like I remember when Cardano was getting which was the one that was getting sued?
Ripple.
Ripple. Remember when Ripple was getting absolutely shit on when they got sued?
Yeah.
And like the price went down to, I think, the lowest it had been in like, I'm going to pull up the chart just because I want to get this right. And I'm bringing this up for a reason, so bear with me, everybody. It got down to 10 cents. Okay, it got down to 10 cents. And then people started having that like counter trade idea, led in a lot of ways by 3AC and a lot of other people, where it's like, look, if they survive this is going to have a huge run. And guess what? They survived it. It went from 10 cents to $1.95. Now, it's still being worked out, but it looks like they're going to try to become compliant since they're US based. And if they figure that out, that's good, right? That's a good thing for them.
So where does that tie in for you back to Ethereum?
It ties in for me for Ethereum Classic because there's going to be a catch-up trade or a hedge trade in Ethereum Classic. You've already seen it. And any sort of issue with the merge becomes, oh shit, let's go back to Ethereum Classic, or let's fork.
I don't know.
Yeah,
I don't know if I would agree with that. I think
okay.
so. You might be right that there's a trade to be had. I would not touch it for any long period of time. I think like if there is upside, it is very short term. I think the like idea that something goes wrong with the merge is very, very low. Like everyone knows what's at stake. And so like this would not be happening, in my opinion, if it wasn't ready. And so I don't think anything will go wrong. Anything massive will go wrong. If it did, I don't think there's a mass exodus to Ethereum Classic. I just don't. There's no activity there. And so like for all the reasons that we think that Ethereum has the narrative play for the future, Ethereum Classic does not. I don't think you're going to see major protocols say, you know what? We're going to go over to Ethereum Classic. Make sure you move all your stuff. No one's going to do that. I don't see it. But we can both be right. There can be a 15% upside in the following 3 months if there's a problem, and then it goes back to obscurity. So like we can both be right in that case.
Yeah, and I just think that it's an interesting hedge. It's something that I'll be watching and considering. The problem is like ETH Classic had a 51% attack like 18 months ago. Okay. So like they still get attacked and drained decently often.
So we should talk about the potential centralization concerns post merge, because that is one of the concerns, is that these validators can get very large. So there was a podcast with I'm going to forget his name, so I'm not intentionally sliding him, but there's a guy that worked on sort of merge metrics since Beacon Chain launched. He works at Coinmetrics, and he was on the brink most recently, the most recent episode, and he was talking about this risk of centralization on validators. What they did is they looked at people who spun up validators at the bare minimum. You have to have 32 ETH to spin up a validator. And they said anyone that is running a validator that is at the 32 ETH mark, we will consider an individual. Okay, so like if you have just 32 ETH and it's in a validator, we think you're an individual, not an entity pooling. If you have more than that, we think you're an entity pooling. A meaningful amount more than that, we think you're an entity pooling. Only 5% were individuals. That means 95% were pooled, which is not crazy. A few reasons. One, it's not necessarily easy to run a validator. I couldn't do it. Maybe you could do it if you spend enough time on it. Also, the type of like network requirements. So if your validator goes down for any period of time, you get a penalty. And that penalty is, I guess, meaningful enough to sort of cause the average person who loses power, or their internet goes out, or you can get slashed. The cat bites the Ethernet cord, right? There's like plenty of at-home reasons why it could go down. You'll face big penalties. That's another reason you might want to go to a large staking service. So these services, and you brought up Lido, and this is where I wanted to go with that, have massive appeal for a very good reason. They're a good service. I understand why they exist. However, Lido is over now 30% of the staked ETH. So
That's
themselves
crazy.
as a validator would be massive. Then the other one you have to
Yeah.
think about is Coinbase. Coinbase has definitely made their intentions clear that they will be running staked ETH. They will be offering that to clients. They'll be pooling and running validators. uh, Coinmetrics had a hard time quantifying what percentage Coinbase had because they were changing their wallets so often. So what they did is
Yeah.
they started to just look for patterns and say this is probably Coinbase. It was a very, very large percentage. So there,
Oof.
I think there is a fair concern of centralization issues um, post merge. But what I would look for is the market to quote unquote solve that. Right now, it's very difficult. It's not like a very well known thing. The average ETH holder that like has some money on Coinbase or something isn't, I don't think, thinking about staking right now. They probably don't even know the
Probably
merge is
not.
coming in a week.
Yeah.
That will change. The market will go out and create new services and advertise those services, and enough new players will gain little bites of Lido's market share so that that 30% hopefully becomes 20, 15, 10, and then there's a bunch of long tail.
Sure. Yeah, and I've there's a lot of people speculating on that because essentially it's just going to be a percentage yield of staked ETH, right? So like the funniest thing I've heard is really what we're trying to do with Ethereum is create. Well, no, we're not. All right, so bear with me. It's essentially the rails for a decentralized internet, right? Can we agree on that basic premise? We're using it for financial purposes right now, but it doesn't have to be that.
Yeah.
And this the merge is setting the table for exponential growth because there's a limit to what can be done on a proof of stake chain. There just is, even with the rollups that we have. So you have the ETH merge to proof of stake becoming the rails for what is really Web 3.0, right? Decentralized internet. And when you think about that, who owns Web 2.0, Alan?
Uh, Google, Facebook.
That's right.
I don't know. Amazon.
Amazon
Yeah,
Web,
Amazon.
AWS, Facebook, whatever it is, Google, they essentially own Web 2.0.
Yeah.
And they have, right? It wasn't intended to be that way. Like Web 1.0 was like everything through like AOL and dial up and shit like that, which I grew up with. I'm sure you didn't. But, like that was like your window into the internet was through an AOL dial up. And then it was, okay, now we can go straight to the internet, but essentially the internet as delivered to us from, Microsoft at that time. And then the antitrust with all that bullshit led to Netscape, which led to Google, which led to where we are now, right? And so you saw this kind of evolution to this point to go now who is it? Now, I like to think of it like this. If you wanted to be like, hey, let me get a piece of that sweet AWS fee structure, they'd be like, yeah, fuck you, go buy our stock.
Right. Yeah.
Okay. Like there's no way that's going to happen. And there's still like some semblance of censorship that can be done because they control what goes on and what doesn't.
Correct.
Right. And so you're building up this new internet. And this is coming back to the point of centralization where right now there's really like AWS and like Google Cloud and Microsoft and Facebook. And like really they own the majority of this shit. I'm missing a couple others, but I'm just like talking off buzzword
YouTube.
names. Sure. Part of Google.
Yeah.
So the thing is, we're moving from masters that we don't particularly enjoy, and then we're going to be moving to these centralized staking resources that are going to essentially, if the picture comes to fruition, be the exact same thing. We're just serving different masters at that point, right? Like, so the main stakers are going to get bigger and bigger pieces of the pie. Now, even if they are individuals, certain individuals' percentage would grow. If they had a larger percentage, it will continue to get bigger and bigger because that's how it's going to work.
Yeah.
So it's pretty interesting to me that we're essentially in some respects robbing Peter to pay Paul. I think there's just going to be a more democratized centralization. I don't know. Do you get where I'm going here?
I don't yet buy the argument that people really care.
That's
I
fair.
just don't think people care. They want to use whatever the application layer is. The average person does not care what's behind it. Like
Yeah.
I don't know. I don't know the percentage. I want to say 80+% of every website you go to has Amazon behind it hosting it. Like you don't care.
Right.
You don't think about that. And so what if it was, let's like insert, take AWS out and insert the like Web3 alternative like Akash or something like that,
Yeah.
which has not done a great job gaining traction. You
No.
don't care about that either. So I,
That's
I don't
right.
know.
Yeah, it's a good point. Yeah, you're right. Okay, like you are right. What is intriguing to me is if I had the ability to place an investment with a pretty decent returns into AWS and like be a part um, of that governance,
Oh, okay.
I'd be interested in doing that.
So the governance part
And
is the sticking point for you because to be clear, you can own a piece of the AWS pie, just you don't get any say over it. So is the part that matters to you
correct.
the say?
Well, the say, the transparency, the ability to go and grab information whenever you like I would be, I mean, all this stuff's coming out about censorship from the previous campaign. And like, look, I'm not even saying it was wrong because Trump went crazy. Okay. Like he did. And so, like, some of the stuff that they were just like kind of quietly subduing, fine. But like, everyone has to be complicit in allowing that to happen. Right.
Okay.
So that part bothers me a little bit.
I don't
And
I
so,
don't
yeah,
know
go
that I
ahead.
don't know that Web3 solves that. Like, I
Mm,
mean, look. Okay, so you're very involved with crypto, and this is not a shame. I'm
yeah.
like genuinely curious. When's the last time you voted in a proposal? Was it Juno?
Yeah, I mean, yeah, I vote all the time on Cosmos, but the reason why I vote all the time in the Cosmos ecosystem is they usually base airdrops on how much you participate in governance.
So you are a high level user, and you
Yeah,
never vote other than that one chain, right? So like
pretty much. That's
Ethereum
correct.
or
Yes.
so like I just
No.
the average person doesn't care. Like okay, actually, a perfect example is I own a ton of mutual funds. That's like my thing, right?
Yeah.
I'm very
Sure.
uh like I only focus on mutual funds for traditional
Okay.
investing. I get occasionally a mailer that says it's time to vote on whoever's going to be on the board of something. I don't even read it. I don't even look at it. That's
Right.
exactly what it
Yeah.
would be is if you took out traditional finance, put in Web3, and you sent out mailers for future proposals. People would be like,
Right.
dude, I've got a real life. Like, I'm going to the doctor tonight. I got to drop my kids off at daycare. I'm not voting on the next EIP 220 protocol.
Yeah.
Like,
Yeah. Yeah.
no
Yeah.
one cares. And so
Sure.
I just don't think it matters. What
No, look,
matters is the
you're
application
not
layer.
wrong. You're not
The
wrong.
application
Yeah.
people want to use things. They want to be entertained. Like we live in
Yeah.
an entertainment economy, attention economy, excuse me, where the only thing that I find value in is what entertains me.
Sure.
And so I you have to like I think a perfect example of that playing out is the biggest use for Ethereum last cycle were pretty pictures on the internet that people paid tens of thousands of dollars for. That's fine. But what I like is that I didn't have to be into pretty cool pictures or cool pretty pictures
Yeah.
to have a benefit from the base protocol, right? So like Ethereum took a giant
Right.
run because someone decided that pictures were worth 20K on Ethereum. Well, I don't really care what you say is worth 20K in Ethereum. As long as you keep using it and you keep pumping my bags, I'm happy. That's what the average
Yeah.
user is going to think, or the average owner is going to think. The average user is like, I don't really care about this Ethereum thing. I just want the cool picture where price might go up. And a perfect example of that is Solana. People picked up
Yeah.
Solana this cycle not to use DeFi. I mean, some did, but not majority. Is because well, I want to buy that cool picture, but I can't buy it on Ethereum because I don't have enough money. But I can pay for the gas on Solana.
That's right.
So
Yeah, yeah. So, all right, I get what you're saying, and really, I don't mean to run so far afield on this. And the reason why I'm even bringing this up, and I think you kind of hit the nail on the head there. I want to be entertained. Well, that's I think what drives retail. But the point is with this merge, the ability to build sidechain type rollups that kind of fly into Ethereum that companies could own, that sports leagues could have rollups, that Art could
Yeah,
have their own
I
roll
agree.
up that can all feed back
Yep.
in to this major player now becomes possible.
Yes.
Quite frankly, what the ETH this is funny. This is me, shilling Cosmos again. What the roll ups and what they're doing is essentially just building a shittier version of Cosmos. Now, they have the advantage of a million times more money than Cosmos has. Okay. But essentially, what they're replicating is what Cosmos has already done, which is a separate side chains for application layers to allow you to roll up into the main network. And that's right. It's what it needs to do. And that's why, like,
So
if you ever look at Vitalik's comments, he likes Cosmos. Like, he likes what they're doing.
okay, so here's a
Uh,
perfect real life
but
example
yeah,
of that. Facebook copies everyone else's features.
yeah,
Snapchat did stories. Facebook did stories.
sure.
There's a new app. Oh, man, I'm gonna. Well, it's not even new. It's just like I'm old apparently, and it's new
Yeah.
to me, but it's been popular for several years for younger kids. What it is like real life social media. So instead of all these filters or all of these like staged photos where it's like all rented cars and like I took a vacation just to take pictures, what it
Yeah,
is
no doubt.
once a day you get a notification on your phone that says like show what you're doing right now. And it's random. Could be in the morning, could be
Oh,
in the
that's
afternoon, could
wild.
be in the evening. But let's, for example, I'm walking the dog. I get this notification. It's like, cool, I'm walking the dog. And you snap a selfie and everyone sees your real life. That was a whole app was built around that. Kids were like, this is cool. I'm sort of done with all the fake Instagram bullshit where it's like everyone's life is, they're
Yeah,
decabillionaires when they're obviously not.
no doubt.
I
Right.
just get normal pictures like, hey, I'm doing the dishes right now. I am a real person. Facebook is now stealing that. So in that example, to go back to your point, the real life example is Facebook and Snapchat.
Yeah.
Ethereum and Cosmos. Cosmos can go prove a concept and say, hey, there's some demand here. And Ethereum can say,
Yeah.
yeah, we'll work on that. We already have the user base. We already have the infrastructure. We already have all of the
Yeah, for sure.
protocols in place. We'll take that one-off feature and roll it in. That's why I would like to make a bet on Ethereum and not all these L1s, because the
Yeah.
L1s are trying to be too specific. There's one for NFTs. There's one for fast transactions. Like you ran through all the use cases. Ethereum can say, go prove that someone cares about that, and once you do, I'll
We'll
bring that
roll it
feature
in.
in.
Which really shows that versatility of Ethereum and why it probably is the best investment long term, because they like the fact that this has been in the works for 2 years. 2 years is not a long time.
Well,
It really isn't. In this world it is. But like think about it on like a company basis. Like 2 years to completely overhaul the rails of your business, like that's pretty hard to do.
yeah,
Okay. Like you guys are overhauling the rails of your business. How long you been working on it?
yeah, a year. Yeah,
Right. So like it's hard to fucking do. And like they built a lot of people across a lot of different countries to pull everybody together to
and the
do
stakes
this.
are higher
And it's pretty
for them.
the stakes are higher. I mean, really, look, the thing I would like to pass across to people is they're completely changing how this chain works. And they're confident in saying, you don't have to do anything.
Yeah, that is such a win. Good point that you brought that up, because imagine like these L2s, you have to be a little bit involved to use them or to
Correct.
care. I hope that they find a way to kind of integrate that in the I don't know what to call it, the base layer experience, right? I don't have to level up. If I can get to a point where I don't have to level up as an Ethereum user to be on an L2, that would be a win. Huge win for Ethereum here, that you don't have to do anything. You don't have to upgrade your
Right.
wallet. You don't have to add a new network to your MetaMask. It will just work.
You know what the funny thing is going to be? Mark my words on this.
Okay.
The merge is what? What's today's date?
It's like
7?
approximately 9-ish days away.
Yeah. So like 9, I think they said like 16th to the 18th or 15th to the 17th or some shit like that. Mark my words. Merge is going to happen. There'll be some minor hiccup because there's always some minor hiccup that's like immediately resolved.
That will get blown out of proportion on Twitter.
No doubt. And then it'll be done. And you know what's going to happen? It's going to look and feel exactly the same. And people are going to be like, what the fuck? Like, I'm not saving money on transactions. What did this even do? And that's why this is kind of funny, because there's so much being made about it. But like Joe Blow user is not going to notice any functional difference. Yeah, fees are going to go down a little bit. Not a lot. Not a lot. They're really not going to go down a ton. Like maybe 10%, I think I read. And that's what they expect to have happen. The point is, Scalability, guys, is what's happening here. It's the ability for sharding and roll-ups, and how do we do this efficiently, and how do we secure it more widely. And it's setting the layer for what happens next. So for all of those doomsayers out there, which by the way, Kobe's one of them. I'm not going to dox his private Twitter account because somebody did recently, and
I feel like
he got pissed and
everyone.
like.
Are you talking about like his actual personal? Everyone knows.
No. He has
okay.
two that are like unclaimed, that are private, and he just opens them occasionally, and then he'll like actually say when he speaks.
If I
not
say
like
it,
the
can you
public
bleep
Kobe
it
one.
out?
Yeah.
Is it Fish?
No.
Fish XBT?
No, it's not. Well, I'll bleep it out for myself. It's Maniac.
Okay.
Maniac.eth. And that's his Twitter account. I'll send you a screen grab. I've tried to follow him. He doesn't let me follow him.
Oh yeah, I put in a request too. Okay, I remember this.
Yeah. So he doesn't approve me. And I have people that he has and just send me screen clips whenever he says something interesting. Okay. Kobe's been generally right on macro moves, like pretty much since I started following him, which was like 2.5 years ago, right? He is doomsaying so heavily right now, so heavily about not crypto explicitly, just a macro market and how fucked we are in the coming years. Like very heavily. He's like,
okay, but also remember his worldview. He is, I'll just say like EU. He's European.
No doubt.
They can't turn on.
There's a lot going on.
You've got no gas. You're looking forward to no heat. And then also, I heard this week that Germany specifically, not that Kobe's there, but it's a European country, will not be able to carbonate their beer.
What? That's a big fucking
so
deal.
Not only do you have no heat, you have no beer.
Yeah. See, now I got to pull it up. But so I don't want to dox what he said, but the long and the short of it is there's a piper to be paid for the sins of what we just did over the pandemic that are going to have long tail effects that we don't know about. And like, it seems sensational and dramatic, but I kind of get where he's coming from. My point in even bringing up that he said this, for people who are like, why the fuck are you guys talking about this private account I can't see anything on? My point in even bringing up why he said this was, what we just talked about with ETH, what we just talked about with scalability and where this goes from here, is why if you've dug deep enough into crypto coverage, there's been a lot of talk about, is this the last run ever, like sensational run ever, where it's like things went crazy for a long time, people made crazy money, and we think this is it. This is the reason why I think that's bullshit. There's definitely going to be more runs. There's definitely going to be another massive cycle. There is definitely going to be ways to make generational money. Probably, in my opinion, the next cycle will be the last best opportunity to really, like, you kind of can fall into success. It's going to get harder with each cycle as more, the way I would put this is more sophisticated investors kind of wade in. It's going to become more difficult to find stuff early, to get there early, to see ground. It's just like the .com bubble, right? Like pets.com, whatever the fuck it was. Like that shit took off. And then all of a sudden became a lot harder after that. When people were like, okay, the internet's here to stay. I think you're seeing that happen. But we're going to have another cycle, and this is laying the rails for that. So even if you haven't read about the merge, there's two things I want to say, and then we can kind of transition or wrap up or whatever it is, and there's more to talk about. But there's two things I have to say. One, you should look into the merge and the ramifications long term. I'll link the articles that we use today. But did you see that on, let me pull it up. I don't want to get this wrong. Yep. What's coming out on September 27th?
No.
Proof of Stake, The Making of Ethereum and the Philosophy of Blockchains by Vitalik Buterin.
Okay.
It's a book. On the 27th by Vitalik, explaining where this goes. And I'm going to buy it the first day, and I'm going to read the fuck out of it. Okay. Because it's going to have, dude, Vitalik, for being a weirdo, and apparently he's got a 14-inch cock based on that thing last week.
Okay, you have to give context now. You can't just say that.
You want to give context?
No, you give context. You're the one that brought it up.
All right, so
this is what you get. You now have to explain it.
Yeah. Anyway, There is a picture came out. Where was he? He was like out east
I know.
somewhere,
He's just
right?
outside.
It was he was outside, but he was like traveling. So he was like in Asia, and he was outside, and they took a picture of him
Are you assuming that
next
he was
to.
in an Asian country because there was an Asian girl standing next to him?
No, it was based on the
Okay,
attire of the other
okay, got
pictures I saw. But yeah, maybe I don't know. I could be completely projecting
it. He
incorrectly or
must be in
whatever. I'll
Asia.
look it up. God damn it, Ellen! Now I got to go back and edit that part out. All right.
No, don't edit that. You have to own it now.
So, so anyway, there was a picture of him, and it looked as though he was having a good time. Okay, let's just put it that way. And through the use of the internet, some guys use some fancy trigonometric concepts to measure, I'll call it the bulge, if you will, and extrapolate how well endowed he was. Okay, so that's what I'm talking about.
Yeah.
And
Got
then,
it.
like
Oh,
that,
okay.
honestly,
I understand
they
now.
were like measuring this versus like, all right, look at his bone on his wrist. If that's that size, and you take this angle here, dude is hung like a horse. Anyway, so for all of the, and this kind of goes into my point because I didn't want to come back to this as a serious topic. The guy's kind of a joke, meaning that like
He's silly.
is
He's silly.
not intellectually a joke, but like he's just a kind of a silly dude. He's kind of a weirdo.
He's a nerd,
doesn't
dude.
really,
He's a nerd.
He's a nerd.
It's fine.
Just straight up.
He's a nerd.
Nerds are cool now. But the thing is, like, dude still wears t-shirts that don't fit him, and like he has bizarre posture and ends up saying weird things. And like I think he usually knows what he does. Like he's got that weird like speaking half through his nose half the time thing. But anyway, for all of the things that he gets like made fun of, dude is unbelievably smart and has what I like the most about him, quite frankly, is that he has zero problem shitting on Ethereum sometimes. Like he knows there's drawbacks to Ethereum, and he's not like, no, everything's perfect. You know, like he said, like, no, we got to work on this. This is bad. Like we don't do this well, and we need to improve on it. And like he is the de facto leader for Ethereum when Ethereum doesn't have to have a leader, right? Everything is voted on, everything is moved from, but that dude's weight in how much he's thought about this. And let me give you an example. Go back and look on his opinion on proof of stake chains like 3 years ago, 4 years ago. He was like, no way. There's so much wrong with that. I can't even imagine us ever doing it. And he changed his mind publicly and outlined why.
It's important.
Like people just don't do that.
The other part that you haven't brought up yet of like why we might catch a narrative off of something like the merge or why it could be important is the like ESG environmental like baggage that comes with proof of work. Right. So there's a whole subset of an investor class, I guess. Like I have never met any of these people, but apparently they exist who like don't want to invest in a company or invest in a product if X, Y, and Z. I've never met these people ever. But apparently they exist because every time you go meet with anybody that's like trying to sell you a financial product, it's always like, well, let me show you all the ESG options. It's like, who's buying this? Who is giving up returns so that do you even think about
the environment? No.
So,
because you know what? Let's follow that thought through to rational conclusion. I do think that will be a part of the narrative, and it will get a small percentage of investors on who otherwise wouldn't have been. Who like
I don't think that matters. I just think it removes the objection. I don't think it attracts anyone new, but it removes the giant hit piece in the New York Times saying Ethereum's doubled in the last 2 weeks, but there's a problem. You know, like those won't exist anymore.
Yeah, I agree. And I think like any logical person, like this is my problem. And I feel like an asshole when I do this, but you ever go to the grocery store and they're like, hey, do you want to round up $1 for like, you know, kids who need food?
Yeah. I'm like 10% of the time I do. 10%.
10% of the time I do as well because I just feel bad or like it's a nice checkout lady and I'm like, fuck, I don't want to feel like dick. But usually I don't. Not because I don't care about it. But one, why am I allowing Jewel Osco to determine who's getting this money? Right. And I just go donate on my own to the places I want when I research. Okay. So if you care about the environment, are you like, oh, let me sacrifice some returns so you can manage this money for me and giving it to environment? No, I'm going to go do my own time and research and put that stuff in. So is there actually a narrative or, you know, is it all garbage? I don't really know, but you know,
it's something new to sell. That's what it was. It's something new to sell. Sam Bankman-Fried has an opinion, I believe, on this. Well, not about ESG, but his point of this effective altruism, which is I'm going to give away as much money as I can and make the biggest difference that I
Yeah.
can. I believe he has said, and I don't want to put words in his mouth, I'm going to go make as much money as possible, sort of not thinking about, am I making it in the best industry or am I thinking about ESG?
Yes.
But then once I have all of that money, I can go make change wherever I want, right?
Exactly
So
right.
that part makes
I
sense to me.
could not agree anymore. That's
Don't
perfect. You
sacrifice
summed it up way
returns.
better.
Don't
Yeah.
sacrifice returns to make a difference. Get the returns and then go make a difference if you want to.
Yeah, and I think EWT is a token that is doing that. They got a shout out from BlackRock not that long ago, and they do something along those lines, like energy alternatives on the blockchain and something like that. And I have not put the time into it that I should yet, but they had something like that. And it's caught it caught enough steam for BlackRock to actually make a comment about it like 3 weeks ago, and I was like, huh. Wow, I read about that a year ago, and I was like, "Who the fuck cares?" And here we are. So apparently, there is a niche for it, but not one that I'm not going to do anything different.
So anyway, long story short, I just think that this merge removes that objective, which for some subset of people that might matter. Also, it could matter for institutions where all the money managers don't care, but the institution as a whole and like their review board wants to. Hey, we don't really want to be in any hit pieces. Well, you don't have to worry about that anymore. So I think it's a win for that reason.
Yeah, it provides political cover for investors, I guess. You don't have to deal with those questions. 100%. So anyway, I will link the book because I'm going to buy it September 27th. That's literally 20 days away.
You should make it free. What does the guy need more money?
I think what it says is all of his proceeds will go to support open source public goods through Gitcoin grants. Okay,
that's fine.
So there you go. And it is what it is. You get an NFT too if you buy it. Whatever. Yeah, that's what I want. Yeah. So I'll link that. I'll also link kind of a summary. It's like 30, 40 pages that we kind of took a look at here to give you the broad view on this. But in my opinion, if you're listening to this, you have an interest in crypto long term, you owe it to yourself to read about this, to give yourself the baseline to do the next bit of research. Because like I'm saying, that's kind of what this is too. It's a merge to set us up for what happens after this. It's not going to like September 20th or 19th, whenever this is done, we're not going to wake up and be like, holy shit,
is that 4K?
VR on the blockchain. Like it's amazing. Okay. Yeah. And it's all went up.
A question for you to end out on. You are the trader of this podcast, right? We've talked about the opposite side of builder versus trader. So you are the trader. So here's my question. I agree with you that we will wake up post-merge or, we'll watch the block and then the next one we're going to be like, nothing really changed. That will be a sell the news event. Okay. So let's assume for a second that it's a sell the news event. At what price or how far does Ethereum drop based on the fact that it's like, oh, the merge happened, but I don't know. I expected it to double and it didn't. What's your call? From 1,500. Let's assume that it stays around 1,500, give or take, between now and merge. How low does it go?
I think we'll actually get closer to 1,000 between now and then. Okay. I think that you have a decent chance of the lows getting swept.
Which is what?
Under $900.
Under 900. Okay.
Yeah. So when I have looked at this before, the number that I always come back to is like, if it's not 750, it's 500. So I have been shorting Ethereum at every impulse lately, just because the macro news has been so bad that I've just kind of been playing that like it has incredible relative strength. Relative strength, for those of you who don't know, if you look at its performance versus other assets, it's crushing it, okay? Doesn't matter what it is. You can look at Ethereum over the SPX. So like how is it performing against? It's been crushing it, okay, for a while. And so you're starting to see some of that relative strength go away. And that's what I'm trying to play. But yeah, I'm waiting very, very much so for a run back to 2000. I think we probably get another rip into there.
I think so.
I think it gets rejected, and I think we'll take a sweep at the lows. So the best thing for me is I think that the best case for Ethereum through all of this turmoil is a range from 1,000 to 2,000 with wicks on either side. If it can stay there while all this stuff is being built and happening, the next run I'll see at 10,000. Like I swear to God, that's how it will work. But if it continues to give up more ground, it's a pretty long fall, man.
Okay.
It's a pretty long fall.
Just to be clear, you were calling for approximately, give or take, a 35% reduction. So we'll see. Let's revisit this in probably 2-3 episodes.
Yeah, 2-3 episodes. We'll have more. Let us know if you guys want us to cover any other part of this. We'll happily do it. I think this was worth the conversation. And obviously, we're kind of whetting your appetite here. We didn't get into a ton of the details. We kind of gave you broad strokes. But again, check the links in the description. I'll give you everything that I can, that we used, all the resources you need to hopefully get you prepared. So this has been a lot of fun. Hopefully, Joel will be back next week. We had some more scheduling snafus. And hopefully his microphone's 100% resolved by then too.
Very good. Play us out.
All right, sounds good. I'll catch you on the flip side, my guy.
See ya.
This is so nice. Here it comes. Crypto Parabellum Podcast, episode 6, September 7th, 2022. Have a week.